Joining us for more on the corporate response to the stimulus bill, Teneo Chairman, CEO, and co-founder Declan Kelly. Declan, thank you so much for joining us. Let's talk about the bill itself. Lots of moving parts to it, but big picture, your perspective is that corporate CEOs are pretty enthusiastic about what this will do for the economy?
Yeah, thank you for having me. I think that is even itself an understatement. I think the CEOs have been very vociferous in their support for the bill. I think over 150 of them actually signed a joint letter to the administration and to the president a number of weeks ago. I think it's pretty obvious the market's reaction is what we all expected it to be once this was passed. This amount of stimulus going into the economy and this amount of job creation and support for the various different efforts around the vaccine sort of speak for themselves, allied with already low interest rates and plenty of other capital available for investment generally from the private sector. I think most CEOs that we work with in Teneo have been expecting this for the last several weeks and are relieved to see that the day is finally here.
The CEOs, the corporations you work with, Declan, the people you're on the phone to day in, day out, are they optimistic in general as 2021 unfolds?
Yes, I would say they're extraordinarily optimistic. I think a few months ago, they expected that 2021 would be a story of two halves, if you will. First half would be, getting the vaccine distributed and administered, and the second half would be a gradual recovery into a more normalized economic environment. I would say that has been delayed a little by the distribution issues that we've seen, but they're not that bad, I suppose, in general, especially in the United States relative to the rest of the world. But you're seeing very, very positive indicators around earnings, around guidance. I think consumer confidence is getting higher. I saw recent data that showed that 85% of CEOs in the Fortune 500 were very optimistic about the year ahead. We're looking at 5.6% global growth projected by the OECD for 2021, 6.5% for the United States, which is the highest number since 1984. So, from that perspective, I think confidence is really, really high, and probably with some level of justification given everything we see going into the economy.
Well, on that note of confidence, and we're talking about a lot of the cash going to the public, to individual people out there. Corporate balance sheets, at least in a lot of sectors, are pretty flush right now. And there's a lot of speculation amongst investors about how that money could be put to use, whether it's increasing CapEx spending, whether it's M&A activity, or simply something like share buybacks or dividends.
Yeah, I think it's fair to say that a large percentage of CEOs in the Fortune 500 are really looking at their capital allocation strategy in general in light of all the things you've mentioned, and given the fact that the markets are where they are. I still think there's a significant disconnect between the stock market and what I call the real economy, and Teneo has written extensively on this. We still have close to 10% unemployment in general when you look at the real numbers underlying. But in general, most companies are looking at significant capex and significant consolidation in certain sectors because there's more cash flowing into those sectors. I think you're going to see a lot more of that activity in the second half of the year. I still think it's a real sort of lagging indicator, but I think the M&A will increase much more significantly as we head into 2022, because we still do have some bumps in the roads that we need to overcome. But I definitely see confidence coming back in, and I definitely see larger deals happening in the second half of the year for sure.
Declan, let me ask you a question that may be a little more on the philosophical front. You mentioned this belief that this stimulus is expected to be very good for the economy. But what about just the idea that government spending and government involvement in essentially plying the private sector with cash during periods of downturns can be positive? Because I feel like perhaps in the past, CEOs may not have been so welcoming of it, or maybe they would have feared inflation or the implications for taxes or so-called crowding out. Do you think that there is a change maybe that started with CARES or sometime prior to that in how corporate executives think about the potential for fiscal policy, fiscal activism to accelerate and help rebound the economy?
It's a really interesting question because, we can look politically at the United States and several other countries around the world and see deep polarization, almost 50-50 split. Yet there is this congregation around the middle economically in terms of a lot of the efforts to inject stimulus into the economy in the United States, but in other places around the world and other democracies, especially in Europe. So you're seeing a lot more centrism in that respect in terms of people coalescing around the need for investment. So yes, first of all, most CEOs are very flexible, nimble, and realistic, knowing that from one administration to another, you need to be able to pivot depending on what you see. But bear in mind one differentiating aspect, which is the pandemic. We haven't been through a pandemic before like this in living memory. And so a lot of those rules go out the window when you're faced with what we've been faced with economically. And I think what you're seeing from a lot of corporations in the United States and frankly globally is that a lot of those sort of geopolitical considerations and whether or not you're a Republican or a Democrat really go out the window when people see that you need the injection of stimulus. In this bill is about 350 to 400 billion for expenditure in major cities around the United States and major state capitals and large urban areas. And I think that's pivoting to an eventual second bill, which will be around the infrastructure area. And, we've seen in America, not just post-World War II, but in other periods right back to the Industrial Revolution, that when America invests in itself and put itself back to work in investing in infrastructure, it has a positive impact on the economy. I think you're going to see both parties coalesce around that in the weeks and months ahead.
Declan, let's stay on this philosophical idea, because it's not just been a health crisis, it's been an economic crisis, it's also been a social crisis. And as we sort of head towards what, quote unquote, might be some sort of new normal, what are CEOs saying and thinking about their new role within this as we hopefully end the pandemic? I know that you've been teaming up with Global Citizen, for example, thinking about how we can look at this from a more global perspective and become a more, dare I say it, just society? Do you see an equal recovery out of this?
Well, thank you for mentioning the Global Citizen and Teneo partnership. We last week launched it. It's called a Recovery Plan for the World with Ursula von der Leyen, the President of the European Commission, and Dr. Tedros from the World Health Organization, and also Secretary Kerry. And a lot of other artists like Hugh Jackman and Billie Eilish and Coldplay and Usher and many others got involved. And my role in that is to get the corporate sector to support it. And we've had people like Cisco and Coca-Cola and Delta and Verizon and Weight Watchers and Procter & Gamble and many others, Google, get involved. So we are confident we're going to get a lot more companies involved. But to the philosophical question, I think 2020 brought to an end 50 years of a focus on shareholder capitalism and the stark realism for most CEOs that they need to spend a lot more time focused on ESG, climate change, diversity and inclusion, and all those things. Yeah. And I think we're at a point where that is not going to change. And you're going to see a lot of proxy reports this year reflecting that. You're going to see a lot of the larger institutions, above and beyond the BlackRocks, who've been very vociferous, of course, voting with and against those companies who don't get the memo, so to speak. So yes, I think that's here to stay. And yes, I think society will benefit as a result. And I think, we're looking at that being the new reality and the new different, as we call it in Teneo, going forward.
Here's to more philosophical debates and questions. Declan Kelly, great to have you with us. Teneo, CEO, stay well.